Everybody, it's the Market Sniper. A bad break for the gold-silver ratio means the thing we've feared and have warned about in all our appearances on the gold channels, from Miles Franklin guys, Patrick at CC Bullion, all the channels that we've featured on recently, and the fact that we've stopped focusing on gold and had pivoted crypto until last night, was that gold was not looking and silver were not looking in a state where they were going to be particularly interesting. That usually means sideways when we go quiet on them, and or down. And we'd left a warning on the gold-silver ratio that we felt was pretty bearish, that has triggered yesterday as part and parcel of this dollar strength. And that warning was technically, once this particular gold-silver ratio, let's have a look at the chart, once this particular gold-silver ratio failed to follow through on this break and return move and set up a new technical structure, we were awaiting this, it felt so good, it looked like we were going to get away. Silver then traded around 34.8 at that point. We got put back above the 75 level, got taken all the way back there. That was no longer just a simple return move. We said that has changed structure, and in fact the framing technically now means the can has been kicked down the road for when silver does its magic. I know it's not the news you want to hear. The can has been kicked down the road for when silver does its magic. You've got this capping descending grind line that has been respected multiple times. Here you kind of came within proximity of it there, here, and along again on many return moves there, and then again there, three in short succession with small pullbacks, bounce back up, small pullback, bounce back up, finally a spill away. And then twice over here we said eventually the potential is now more likely, and we put the red line always, you'll see there's a thin red line under there. That's the expectation on balance of probabilities technically that we had, that the gold-silver ratio first goes higher before we say goodbye to this basing descending grind line on the low side or the 75 level, and begin our journey to run the 65 that we've been waiting for so long. That will eventually lead to a contagion to the downside given shortage of silver. And in actual fact, you'll be going the opposite direction if you were to break. And as I take this off, last night you broke to the upside. That means these potential localized highs at around 89.90 are quite likely to be run. You are going to be putting in higher gold-silver ratio valuations. That's a 90, that one, that's an 89.7. And you could in fact run these at 92. That was around 91.8. And the last big high that you had was 96. So we've got a lot of localized levels. You can see these lower alerts are not running, and all my alerts for higher up have been triggered. And I fear this points to an underperformance period of precious metals generally, and specifically more so silver. And this is what you'll be seeing on the silver charts when I put it in front of you. And this rolling interest rate surge, which is as the Fed is cutting rates, the US10-year is actually going up in the opposite direction. So I owe it to you to show you the 10-year rate. So I'll pull that up. Let's grab it here. US 10-year. Also, preemptively and ahead of schedule, we did expect higher rates to be coming. But what has happened is you formed a little broadening structure. You came up to this. We thought, oh, you've come up twice. You were expected to be rejected here. Let's show you on the bigger time frame, the falling wedge, in case you're new to our channel. We've covered this many times before. This debt benchmark, the US 10-year, is absolutely pivotal to be watching in an environment where you are expecting debt collapse. And debt collapse is rate hikes. People paying less for the debt, demanding higher yield. That is pointing to the expectation of greater inflation. That is pointing to the overvaluation of the debt markets generally as an asset class. That is pointing to people exiting debt markets after its 40-year service run as a reserve asset, which it is no longer able to fulfill because it pays too low a rate and is too hyper overvalued, and needs essentially resetting to a point where it was when Volcker finished his rate hiking cycle. And unfortunately, that can't be done with the levels of debt that now exist in the US without a major collapse or contagion. With that all understood, this key driver, this rates driver, which is actually seeing higher rates, we expect the 5% of the previous high to be broken on this falling wedge as part of this move. It has come faster than we thought. The last time we spoke, you were crossing the 4%, and we said you should go continually up in spite of a rate cutting cycle and meet the capping descending grind line in red, again the line that we expect to have broken, and you should have a pullback. We didn't think the pullback would be so short. We thought you might at least get down to the 4%. You may get down to our splitter, which is this line in dots here, very faint, and you could, in an extreme demand destroying event, get all the way down to the low end. It might not take a complete collapse or contagion, but some fear you would get back down here. But what in fact you're getting is what we were expecting after any of these have taken place, and in fact you only pull back this far. You came back and you have broken a seminal break right now in yields going up, has led to a seminal break technically on the gold-silver ratio. Can you see, by technical analysis, we are getting confirmation for our theory that it's going to be a bad spell for precious metals and a particularly bad spell for silver. And it's going to be a bad spell for bond holders that are exiting the bond market to put on Bitcoin, gold potentially, but not too much if it's fear driven, and hypervalued stock markets have also been hit. This is a contractionary environment, and the bid is not going into debt. It's a fear-based environment. We also have covered the USD Korean won that also crossed a major technical boundary on a 30-year setup in the dollar strength versus a first world nation. So in the same event, we triggered a 30-year pattern that we've been tracking for 10 years. The gold-silver ratio has broken to the upside, as I'd previously illustrated in the chart before, and the falling wedge that we thought we'd at least get a deeper dip in the rates and a higher push-up in the value of debt didn't dip near as far as we expected, and is now in a blow-off breakout of that falling wedge, heading in the direction of the 5% with a potential overshoot on top of that. What does that mean? Well, this is all happening in a market where the Fed is supposedly going to deliver a cut today. December the 19th is the day that the Federal Reserve, on 95% balance of probabilities, is supposed to deliver a cut. I wonder what that chance would be if he just saw the reaction of the US10Yr and said, sod it, I won't do it, and changed his mind in the last 5 minutes before his presentation. He's probably going to give a very hawkish comment in that cut to make it appear like it's the last one. The markets are saying no. I've said so many times, and I've predicted this on this channel, the market will tell you that the Fed doesn't get to set the rates when you are at extreme hyper overvaluation times of absolute proliferation of fiat and debt. They will say, I'm not buying it anymore. There is no not-for-profit investing in bonds. You may have had those not-for-profit shorts on silver late on a Friday afternoon in the Asian session when no bid is around. But let me tell you, there's less enthusiasm for the epically huge bond and fiat creation market that is the debt financial system that you are based on. And this right now is saying nobody wants to buy at current prices. They want lower, they want better yield. That's what's happening. The US10Yr is in a price discovery mechanism that is going absolutely in the opposite direction to the central banker who will be delivering a cut on this day. Key levels crossed. The US10Yr. By the way, every yield curve inversion that possibly exists that anybody watches has all reverted positive that I can tell, including the 3-month, which is a quarter. We can do that as well just to illustrate this key point to you. US 03-month yield, that is that one, and we put that in there, and I will show you rates. We have to delog that because it is super pumpamental when you have it on log scale. That has gone through the 0 point, and you are now got a reversion. By the way, fractal HVF in there, squeezy Japanesey, you know the story. Break out, get up to the level, pull back, and smashing it to the upside. What does this tell you? Demand destroying event not far away. They may construct something. They may roll it up in a war, an escalation, a dirty bomb, false flag, Russia, Ukraine, a bank collapse, financial crisis of other sorts, debt-based story. Korea, clearly, in my opinion, South Korea is going to have its own specific geopolitical events surrounding its nation state, see it be one of the worst currencies to hold, given our USD Korean won predictions that triggered also yesterday, along with the falling wedge on the 10-year, along with this reversion on the US 10-year and 3-month. That's 1/4 of a year compared to a 10-year. Short debt versus long-term debt. We are reverting back long. This is when the crisis and the drama happens. You need to rein back your exposure to risk right now. Plus, as is often the case, the stock market, which is super high valued right now, has had a nasty correction. Let's also capture that for you. So I'm going to grab on top of this the SPY and show you that chart. That one had a lovely little first inverted HVF on a very small time frame, roughly a half-hour time frame in there. A little squeezy Japanesey again. Look at that. After making that high and that pullback, look at this. Absolutely textbook squeezy. There she goes. And a spiller, an absolute thriller all the way from Manila. It looks like we've opened up and you are currently trading down at the moment. And that is the first in a new trend. You would have had your stop there. You would have entered short there. You would have absolutely made a great trade. And overperformance applies to first setups and new trends. This has all been a bull market run. That's quite a big recent high. I am on the 30-minute though. I can take you out. But that is a nasty little absence of bid. Why? Debt markets. The guys that are big fanboys for the dollar, and look how strong the dollar is and everything else is battling against the dollar. Debt markets. Your debt market in the US has collapsed more than anyone else. That is a signal that you see the rates spiking. That is because of excess debt, super high interest payments. You've broken the system. Well done. You did it, Janet Yellen. You're the last one to finish it. It started under Greenspan. It got here and you have broken it. The 40-year bond market is certainly over. We're probably going to run the 5-year on that 10-year. You're having key seminal macroeconomic events happening right here, right now, with major triggerings. If you think this is going to be small and it'll pass over, I would say think again. Too many big triggers, 30-year patterns on the Korean won against the dollar. Extreme dominance of the dollar right now on higher interest rates being paid based on the fact that the debt bid is not there right now. In an environment that the person who supposedly controls the rate set is going in the opposite direction and the market is going, no, that way. That's what's happening right now in the world, friends. This is a well-timed precursory wobble that could see big stuff come down. Right about as Donald Trump takes the presidency. What do you think? Wouldn't they just love that? We've said many times before, center-right politicians, none of them work for you, by the way, are the favored choice for collapses. It makes more sympathy for the cultural Marxists on the left-hand side when they undermine the financial austerity or sound money principles supposedly of the right, which they no longer hold because they're all spendonomics. They all just give it to the military industrial complex while the other party gives it to waves of immigrants. There's nobody serving you. You serve yourself. You need to get wise. This is big stories. That's a big spill. It could continue. Overperformance, there's no saying for how far or for how long. Too many things and too many shoes have dropped recently. Too many shoes and too many things are dropped. Big patterns setting off. You need to be de-risked. You need to get safe. And by the way, banks, cash in the banks isn't the safest thing anymore. Cash physically, fine. I'll have you take that. But it's better to have gold that will lose a little bit of value, but will rebound on any cure. Even more so than high beta assets. It's not the time to be going whaling in to NFTs or the most sketchiest degen cryptos. Silver is suffering badly at the moment, so we want to bring up silver just to show you that. We brought you the gold silver ratio. You can see what it's doing to silver right now. By the way, we have a macro positive structure, but if you pull all the way back into our funnel, right the way down to our midpoint somewhere around here, you could be right down to low 20s if that happens. I don't know how bad it might be. In the long term, silver has a huge move to offer, but as we've continued to state, people are jumping too soon through the stages. Big dominoes are leaning and rocking and need to be allowed to fall. They need to fall, they'll topple, they'll hit the next one, wait for it to wobble, wait for it to start tipping, to start fall. If you jump to the end before you allow the processes to play, you've got long silver at 34.8 and you're watching it at $28, $10 less and chucking it further down. I'm a net accumulator investor and I'm happy to hold through all of this and have bought at much lower levels as a long-term plan because of fear of unobtainium. But in terms of trading, you've got to watch it. This is bearish. This is bearish. This is selling the things that are nailed down right now. There's a real fear. There's a super overvalued stock market. There's a hyper overvalued bond market that nobody wants anything to do with really anymore, which is why the rates are moving in the first place. Please do not bear all these aspects that are seeing major breakouts take place. On this guy, I've touched on it in other videos. That was a key triggering break over there. Yes, you might get calm and pull back in on this Korean won into the funnel like you're doing on silver. The longer run is a major surge on an interest rate spike of the dollar, where the dollar is dominant and the Korean won is one of the weakest of the majors. That is our view. That is the view on the 10-year yield that we've given you. Copper is looking soft. That is the view of the gold-silver ratio right now, ripping it towards 90 on this break. We have warned after this failed attempt to crack on here that the silver bull was postponed. You dipped through it, you return moved, you spilt. It was looking so good. And then it got put back in its box, never went again, got all the way back up here. And it's quite clear that we are stacking up to break this. That event occurred yesterday as part and parcel. The interest rate call is coming today. Boy, oh boy, interesting times it is. Prepare for drama. Yield curve inversions and aggressive moves to the upside are seeing violent reversions positive across many of the yield curve control points. That point of collapse, drama, narrative that you will be given at some point as a result of this, the thing that pushes the drunken man off the edge of the cliff and go ahead, have a dive, son, into the big blue, is coming soon potentially. The risk of the demand destroying event could be around the corner. It's going to be an interesting Christmas run into the mid-January. Till next time, I hope you enjoyed this. Sorry, precious metals friends. We don't tell you what you want to hear. We tell you what we see. We backed off out of gold once the structure started to form without the rollover and the next stage taking place. It means the first stage is extending. And the breakout of this means weaker silver, and you've already begun seeing it. Until this tops out and starts coming back down, we're waiting for that break and hold below the 75, whereafter we can have a reasonable expectation of the 65. In the meantime, stocks are selling off. They are hypervalued. Price for perfection. They're in the top 1% of all time typical periods for extreme criteria. In terms of valuations, peg ratios, market cap to sales, etc., etc. Some of which are even surpassing 1929.com and many other periods. It is super steamy out there. Get out of your leveraged real estate. This is not a time for risk on. Okay, till next time, I hope you take this in good spirit. Because it's Christmas and I want to say something positive. You're born to survive and thrive in these times. We are here to help you. Don't lose. Sometimes winning is not losing. You start at defense first. This might be one of those periods, and then you make on attack later. It's never just about attack. Attack wins games. Defense wins championships. Prove that you're a champion, that you deserve to be a sniper. Click on the link below, get your free course in the link below, get added to our mail out list and get this latest information. Key shoes dropping this period right now, all happened in the last day. Final summary, Korean won 30-year pattern breakout, a symbol of dollar strength and Korean won weakness. US10Yr breaking out of a falling wedge ahead of even our quite aggressively bullish for yields expectation, shows debt valuation depreciation. That is a big problem. Your fiat is going to buy you less and less. It's going to start accelerating. On top of that, small first inverted HVF fractal on the SP500 has already thrown down immensely. Hypervalued stock market to be considered under question. All of this is going down literally during this period. Be aware, be warned. You could be at that point where a demand-destroying event could be about to be unveiled by name to you as the preliminary events of crisis start to take hold. Till next time, I catch you later. Book a call. The link is there. Only if you are bold, ready to be a sniper, and recognize you are born to win. And this is just part of the obstacle course, and you're here to run it and complete it in a team, with working together, with getting your best skills together, by building self-reliance, wealth, to make you more free than those that will be captured by the statists that seek to hold the keys to all of your existence. Till next time, I catch you later. Bye-bye.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.